All right, guys, good morning. It's about 9 Eastern. Today is November 10th. I'm doing a quick update. I'm going to try to start doing these a little bit earlier for everyone. I did some work on Bitcoin and crypto as well. I'll kind of put that out maybe after the open, after we do some stuff in the prop room. So I just attached the PDF, and I think there's a way for me to maybe embed the videos inside of these PDFs. I'm not sure. Some technology allows you to do that. I know on the Apple Windows is a little bit behind on that. Otherwise, I'll just do it separately. Plus, I can screen share here and Zoom pretty well and annotate. So yesterday was really interesting. I'll come back to these cycles. Let me just show you on the live charts. So clean this up one sec. So what's been working overall has been tech's been strong, stay at home, COVID, blah, blah, blah. And then, you know, inside the S&P, you have a lot of financials, you have a lot of energy. Energy has been the poorest places you could be all year. Financials have struggled. And with the vaccine, some of that gets unwound. So we had that going on with S&P yesterday, which is unfortunate and tough because we were short that. I was short that area of the market versus long tech. So that you had the opposite performance where S&P went to a new high and then NASDAQ actually is leading the way down now. And same thing with the small caps. You get any vaccine positive COVID news, small caps can do well. All the stuff that's fundamentally has struggled can unwind and go the other way. Okay, but here's what matters. The daily cycle, guys, was high coming into this week. So I'm not surprised. I mean, we liked stuff buying the NASDAQ. I think last time I did the CycleEdge Equities, that was the first kind of update I did in that particular format. And I talked about being long NASDAQ down here. With the cycle, we had some big days. Remember last week, being long day trade was really active on the long side of the NASDAQ. Yesterday was the first day I gave some back coming in long NASDAQ. And then I kind of went home. Well, I'll talk about the positioning right now in a second. But the point is that the daily cycle was high. It's the same for S&Ps. It's across all the U.S. indices. Probably the same for a lot of European equity markets as well. So we shouldn't be surprised by maybe a 3 to 5 day move back the other way. You have a huge topping tail. I talked about it yesterday. There's stops that were run here, stops run here. People chase the longs, and then just a nasty reversal. Topping tail in S&P, outside move in on the NASDAQ where you went higher and closed below Friday's low, and then this gives you the follow through. Now we're back at the 8 on the daily on the NASDAQ. Again, from a cyclical perspective, there's more downside, but the 4 hour, this would be the first spot here at Pi, guys, that maybe we hold. So from a positioning standpoint, I want you to listen to this. I bought the minis, the micros, NASDAQ, I added down here. But I'm going to save my larger contracts for the day trade trend today on the open. Probably at the wider levels. Like if we were to get really knocked down hard in the NASDAQ, maybe I'll nibble. But I'd like to maybe catch some hedge short on the downside if we start to kind of roll over this 5 minute again like yesterday. There was several good spots to short yesterday. Once you started to take these lows out, I mean, it went pretty bearish. So you're in the southern hemisphere. There's a lot of near-term bearishness. And then you just run smack into the 4 hour Pi line. So maybe you hold here, or we get the bigger leg down with the daily cycle. So watch this 11,600 level. Watch the lows from earlier this morning. So that's how I'm going to play it. I think if you want to take some longer longs, like you could take some longs in tech if you have a little longer time horizon, whether it's Apple. I think Amazon's actually the best here. It was knocked down a little bit harder. It's got some of the highest beta, but you're at some pretty good levels. You're at the bands. So I'm going to try to slowly start to feed back into the Amazon longer term long. And then I'm going to use this NASDAQ to kind of trade it around the near term, intermediate term. I bought the micros for a little bit longer term swing trade up. So I'm going to try to be a little bit more flexible with the NASDAQ intraday. Still a little bit short S&P from yesterday. I covered a little bit in the, was it pie last night? But you really haven't backed off that much. You're back at pie. I covered a little bit here. So day trade on the open will probably get about 25 minutes. We're going to watch whether or not we get back below pi and like S&P. Your 15-minute cycle's coming back up. There's definitely room to kind of maybe squeeze a little bit higher in the NASDAQ. But no, I can't trade the Amazon calls right now. So when I put a little bit of that on, then I'll be interested in shorting maybe the NASDAQ at the right spot. Maybe the 30-minute comes into, maybe they try to ramp it on the open and we fade it. Anyways, I'll be with you guys to see how that plays out. So some patience as far as tech. We'll see if we hold pi. Here over here in the 4 hour, you can see like all the cycles are really low on the intermediate term here, this 4 hour. And you're an 8 count down from the high. So it's not a bad spot. Like this is, and then I was going to talk about so here's like Amazon over here on the right is your spread, Amazon versus NASDAQ. And I do 3 times the amount of Amazon because it's roughly a third of the price of the NASDAQ contract. So it gives you a pretty good price comparison. But you can see, guys, that this is 3 standard deviations. Anytime you're high within the range, you should be a seller Amazon. Anytime you get low below here, you should be a buyer. So there was a move this morning. Let's see what time this was. This was yesterday. You really kind of blew out that spread. So again, that's just telling you the same thing. You could be a better buyer of Amazon. Doesn't mean it can't go lower. Maybe you revisit some of these spreads levels from down here. But then it's also the similar over on the left. We have NASDAQ versus S&P. This is 5 times we've been down at these levels. You got paid to be long in NASDAQ and shorting S&P. So that's how I think you still want to play it. I think the underlying structure of the market between all the stuff that's going to struggle in the energy space, financials, there's plenty of things that are in the S&P 500 that won't do as well as some of the tech earnings, etc. So just one day down in tech that it underperforms, that isn't going to spook me away. And the math tells you the same thing. You're at the bottom of the risk ranges you want to think about. And then you see the opposite was true up here. If you were coming out of your NASDAQ Thursday, Friday, that was good. Then you had to get the chance to buy it back today. So those are 2 spreads there telling you the same thing. All right, guys, I'll see some of you on the open.